What's up, guys? How are you guys doing? Today I'm going to post a 4-part video series about the Forex market, with the first part being the hidden infrastructure behind the Forex market. Now, why is this important? You have to understand the ecosystem that you're operating in. Equity indices, commodities, cryptocurrencies, they all have a different ecosystem. They all have different logic behind it. And with a different logic, a trading strategy that might work on cryptocurrencies might not work on commodities. And a trading strategy that might not work on commodities might work on the Forex market due to different ecosystems, different logic that you can apply onto the market. And I'm here simply breaking down the logic, the ecosystem behind the Forex market. Mostly, there is too much to talk about, but I am going to talk about one financial institution that transacts more than 50% of all the Forex transactions. That's why they are a very important player. It's called CLS, Continuous Linked Settlements, and in the 4-part video series, I'll talk about more behind the logic and how to apply the logic onto the charts. And I will also drop many other fucking gems. So just like Zelda, like you have to collect them, man. You have to collect the gems that I'm dropping, because if you don't, I don't know what you're doing. On top of that, man, with my videos, you have to take notes. If you don't take notes, then what the fuck are you doing, right? It's all about hard work and getting the logic together, especially in a world we live in right now with a bunch of fuck-ass people talking about, I'm a trader, this and that, trade like the banks, trade like the central banks. Yeah, they don't know shit. It's not like central banks work at a trading desk. These guys are so fucking stupid, right? I'm against all these motherfuckers. That's why I created this channel. Because, oh man, I can't stand these motherfuckers. But hey, let's get to this. This is way more important. So, part 1, the hidden infrastructure behind the Forex market. CLS, which stands for Continuous Linked Settlements, is a special financial service that helps to manage FX transactions. It acts like a referee for currency trades, making sure that both parties in a transaction get their currency at the same time. So this way, if one party doesn't follow through, the other party isn't left holding the bag. Very simple terms, right? Explanation. Bank A, Bank B. I can visualize it right here. Look at this image. You have Bank A and Bank B. Without CLS, without the, I call it the referee of currency trading. Without CLS, there is a agreement, a trust that both banks have with each other, that if I have euros and you have dollars, I send euros to you and you send dollars to me. But if something happens, whether I face liquidity issues or if I go bankrupt, you send me the dollars, but I haven't sent you the euros yet. Now, I am bankrupt. You already sent money to me. Now you don't receive the euros back. Now you have a problem. Now you face liquidity issues. Now you cannot pay other payments with other banks and other financial contracts that you have. Now all banks, the whole system, the whole financial system doesn't trust each other anymore. And this happened, if I'm not mistaken, in the 1970s or the 1980s, where there was a German bank called Herstatt Bank, and they had the same issue. They were facing liquidity issues. They were going bankrupt. Banks sent them money, and Herstatt Bank needed to pay them back, but they didn't have the money. So now all the other banks that were transacting with Herstatt Bank were underwater. They were losing money. And now all the other banks weren't trusting the whole system anymore, so nobody was lending out money to other banks. It's a big issue. So, why is this all important? So the daily FX trading volume exceeds $7.5 trillion a day, rough estimate, and more than 50%. So you could say arguably around $4 trillion goes through CLS. That's why they're fucking important. 4 trillion, more than half of all the FX transactions. Yeah. To understand 4 trillion, right? $4 trillion is 4,000 billion, or 400 million times a million. It's fucking crazy. 400 million times a million. Holy shit. That's big money. And that is every day. And there's one financial entity that that works with all these transactions. I will get through it. You gotta calm down. You gotta calm down. So the settlement cycle. So CLS has daily cycles where it processes transactions during a 5-hour window when all necessary banking systems are open, the central banks. This helps to make sure that payments are made correctly and efficiently. Now, I will zoom in this image right here so you can see it a bit clearer. So it's all based on the Central European Time, GMT +1. Okay. So with regards to Japan time zone, it's from 5 p.m. till 8 p.m. When it comes to the Euro time zone, so the Central European time, it's from 7 a.m. till 12. With the UK time zone, it's from 6 till 11 a.m. and from the New York time, it's from 1 till 6 a.m. So, eliminating credit risk. So CLS was created to remove credit risks in currency exchange. Like I explained a few minutes before, when there are two parties in currency trading, every FX transaction has two parts, the lag, right? But without CLS, it's based on trust. If something happened with the bank, liquidity issues, bankruptcy, the other bank is fucked too. So both are fucked. But with CLS, make sure that both banks send the invoice to CLS, and CLS sends them an invoice back based on the liquidity requirement and the time that liquidity needs to be available. If both parties have the required liquidity at the time limit, the order goes through. This is how they eliminate risk. And once the payment has been finalized, it cannot be reversed. So some key concepts. So settlement finality. This means that once a payment is made, it can't be reversed or cancelled. Even if one party goes bankrupt, because before their bankruptcy they have already paid it, and then CLS just stores that money and then it distributes those orders back. So that's why the payment cannot be reversed once accepted through CLS. Otherwise, it could lead to a financial crisis, especially when it comes to the amount of orders, the volume of orders. We're not talking about a few $1,000s. This is millions, hundreds of millions, if not oftentimes billions of dollars. It's a lot of money. Now, with payment versus payment, this means that both parties must complete their payment at the same time. So this eliminates the risk of one party sending their money but not receiving the other payment in return from the other bank. Now, there are different types of settlement systems. So there is RTGS, which stands for real-time gross settlements. And in this system, every payment is processed individually throughout the day. So payments are settled as they come in, meaning each transaction is finalized separately. Today, most central banks provide intraday liquidity in terms of overdraft facilities. So these are overdraft facilities. So you have a central bank, and the central bank has overdraft facilities. And just an interesting note, when you go to the FedWire, which is a overdraft facility, essentially in there, I don't think it's specific, I think it's a white paper, I'm not quite, it doesn't matter. In their documents, how how the Fed wire operates, they say that the liquidity risks to a central bank because the Reserve Bank has access to unlimited liquidity. The Reserve Bank do not face liquidity risks from Fed wire funds service, operations, or the provision of intraday credit. So they have unlimited liquidity. Now that doesn't mean that because it's unlimited they will use the unlimited liquidity. Because if you use unlimited liquidity, obviously there are going to be issues when it comes to trust in a financial system if you're just pouring that infinite liquidity in the system. But that's the world where we live in right now, since we don't have a gold standard anymore. We have inflationary things. By the way, one thing when it comes to economics, little side note, especially now, CPI, inflation, you have to understand the core concept behind it. Inflation means inflate. You inflate it means you're expanding something. If you have a balloon and you blow it up, you're inflating it with air. It becomes bigger, right? And that's the same with the money supply. Inflation is nothing more than an expansion of currency and credit, right? You're expanding it. You're making it bigger. You're making more of it. And as a result, right, applying universal laws, the law of cause and effect, that once you create that money and you distribute it into the system, as a result, later on, prices will rise due to the increase in currency. It's that simple. But we got people out there, CPI is only up 2%, so inflation is 2%. No, it's way higher. Just go to the grocery store. Come on now. Don't be fooled by government statistics and all that bullshit. These motherfuckers are lying to you, right? So, little side note, a little bit on the economic side. Anyways, a net settlement. So in this system, banks send all their payments requests throughout the day. Instead of settling each one immediately, the system calculates the amount each bank owes or is owed, and only settles those totals at specific times. Now it got more interesting. Yes, I know the first few minutes were a bit boring, right? But that's why you gotta wait. Like I said, like Zelda, you have to collect the gems now. So, algorithm. In mathematics and computer science, an algorithm is a finite sequence of rigorous instructions, typically used to solve a class of specific problems or to perform a computation. Algorithms are used as a specification for performing calculations and data processing. So two fancy words, sequence and computation. Sequence, what is sequence? Something that happens again and again. What happens again and again? Time. Computation. Computation is the action of mathematical calculation. That's price. Time and price. Algorithms are based on time and price. Now, CLS transacts more than 50% of all the FX transactions. Do you think they do that individually? Go through? No. Algorithms, okay? Now, is there one hidden special algorithm that controls everything like ICT says or whatever? No, I don't think so. I haven't seen the evidence. By the way, I posted this in a 3-part video series a year ago, and I'm looking right through it, man. I see some guys, they took the content, the information that I provided, and they created a trading course behind it. Stupid shit like a 90-minute cycle. CLS has a 90-minute cycle. No, it don't. There is no 90-minute cycle. There's never you can't see that in the papers. I have read hundreds of papers about CLS, about the whole infrastructure and the ecosystem of Forex market. It's not there, right? There's no hidden algorithm that distributes orders. However, in the next few parts, I will show you how to translate the fancy language that they're using onto the charts to actually make money, right? That's something else, but don't fall for that, okay? That there's a special algorithm out there. It's not. Okay, so settling FX contracts. So settling currency trades can be tricky because they usually involve two different currencies from different countries, and different countries, they often have different time zones. For example, if a Japanese bank sells yen and buys dollars from a US bank, the two payments can't happen at the same time because the banks are in different time zones and their local systems may not be open at the same time. Now, the settlement and funding to handle the risks involved in foreign exchange transactions, CLS ensures that the currency exchange happens continuously and simultaneously during the times when all relevant payment systems are open. For certain regions like the Asia Pacific, this window is shorter, so it's just 4 hours instead of 5. During this time, CLS checks for transactions that might seem risky before finalizing them, ensuring that once a transaction is completed, it cannot be undone. Why is this important? Well, post-trade processing is not an exciting topic for most people. Clearing and settlement is not much of an interest, and as a result, the post-trade industry is widely unknown. In order to make it somewhat more attractive, you have motherfuckers talking about, I have calculated or I have found out the CLS hidden algorithm. There is no such thing, okay? Stop with it. It's not true. There's some very interesting stuff out there that you can translate onto the charts, but there's no such thing as one algorithm that controls everything. That's bullshit. So, as of recent estimations, CLS settles approximately a little bit over 50% of the global FX trading volume, and this translates to an average daily settlement value of around $6 trillion. And the total daily FX trading volume globally is estimated to be around $7.5 trillion as reported by the banks of international settlements. And that's why it's important. Why is it important? More than 50% going through one financial institution. And they deliver or distribute those orders sent by large banks and financial institutions. Those orders are too big. If you, let's say you are a bank, you want to sell euros, hundreds of millions, you don't go on MetaTrader 5 and just click in a few 100,000 lot sizes to short it. No, that's not how they operate, right? And even if that were the case, their spread will be fucking crazy, right? So if they sell right there, they get a way worse price. That's why big transactions, a large block of order, they get chopped down into smaller chunks in order to distribute the liquidity more efficiently. And that is done through algorithms. There's not one single algorithm, there are multiple. And so they transact, or distribute, I should say, all those transactions into smaller chunks, distribute it more efficiently. They leave behind footprints, they leave behind evidence on the charts. And in the next few chapters, I will talk about it. I will show you evidence based on some data, some price, and you will see what I mean. All right, thank you all for the first part. I'm out. Peace.